Hey guys, it's Forex James with another video for you. This is a part 2 sequel of how the market makers manipulate the retail traders series. Okay, the first video I made, which is part 1, has gotten the most views amongst all my other videos. Therefore, it's perceived really well by the public. Lots of people are learning new things, lots of great comments, and people who have found the video really useful. Okay, therefore, I'm making this part 2 so that we can further go into the tricks that are played by the market makers. Okay, so just a quick recap. On the previous video, I talked about the tricks that are usually played by them. Okay, that includes the fake out trap, the stop humps, taking out your stops, going against big candles, and long wicks as well. Um, the numbers that I've typed in here, 96% versus the 4%. Okay, 96% of people who try trading will lose. Okay, only 4% would actually make it. So essentially, us as retail traders, we're fighting against the big boys, aka the smart money or the market makers, whatever you want to call it. Okay, just be aware that you are a small guy going against the big guys. Okay, that's the message I'm trying to get across. So in this video, I want to take it a step further by trying to think like the big boys, by trying to look at the big picture and seeing where most people are doing. Okay? So put yourself in the shoes of the big boys, and when you look at your charts, imagine what the retail traders are doing right now. Where are the stops and the orders placed by them? Okay? What systems are they using? Is it a trend line breakout? Is it a MACD crossover? And so on. Okay? What positions are most likely most people in right now? What is their pain threshold? Meaning the point where anymore when holding on to a loss, they just have to let go. Okay? What is obvious on the charts right now, guys? That's what you need to do if you're going against them. Think about it. If you have a group of friends, traders, sitting with you, and most of them think of going long, since those are retail traders, there's a good chance that the market's going to go the opposite way. Okay, trust me, that's the best indicator out there, I can tell you right now. Nothing like those lagging indicators that you see on the charts. These are real people. Get an idea of what everybody's thinking. If everybody wants to go along, there's a good chance it's going to do the opposite. Trust me, I've been in the game for so long, and it's happened to me too. Let's go through some charts right now that I've prepared for you and go through some of these points I've mentioned. Okay, I put up a daily chart on the pound dollar. Okay, so ever since March 2017 all the way to April the next year, you can see a steady uptrend that's been formed, making new highs, higher lows. Okay, really nice and smooth, not too steep. The angle is really nice at 45 degrees. Okay, the pound is continuously gaining strength over the dollar. Okay, and so on. Now, I think we all can agree that this is an uptrend. Okay, everybody tends to be bullish, and we're all taught that if you want to go along, to place our stops below the last swing. Stop loss will be here. You'll trail it along. Let's say you're in this trend. You were lucky enough or good enough to participate since the beginning of the trend. So you'll just continue along, trailing a stop loss all the way on the higher lows, okay, and so on. So with the majority of us being a bull, thinking that the trend will keep going up, these are points where we would place our stops. Okay, so if you're watching this now, I'm guessing most likely that you'll be placing your stops on these swing lows. And these leaves an obvious footprint for the big boys. Because whenever there are orders stacked together or piled up, this happens. Right? This is the same chart, and you can see that the late buyers, okay, who got in the game too late, who bought somewhere near the highs here, are just being trapped into buying this uptrend. Because what happens next? All these stops are taken out. Okay, take a look at this, guys. I'm going to divide this into the downtrend part and the uptrend part. Okay, look at this point and this point, about the same, yeah? Okay, look at the time it took for price to go up and move this much pips and to go down this much pips. It's about half of this. This steady uptrend has quickly been abolished by this downtrend just because there are so many obvious stop orders sitting around here. This is an example when something is too obvious and almost everyone is seeing the same thing. At one point, it's going to tilt to the other side, and it's going to happen much quicker. Now, I want you guys to pay attention to this chart right now and be able to identify the range. Because during a range, guys, that's when new market participants come in. The market cannot trend forever. It needs new market participants to take part in the action so it stays liquid all the time. So let's take a look at this chart and pretend you're a seller. You were able to know that price is going to go down from this point onwards. The market broke this low, made a new low, made a lower high compared to this point, a new low, okay? And up to this point, people are still thinking it's going to keep going down, right? When it rallies, oh, it's a good time for you to re-enter your shorts. Am I right? Where's your stop loss going to be? Right over here. This is where most people would place their stop loss. This is the last attempt to push prices lower, which it failed. It hits the stops of most people here, guys. So you're probably taken out here. And guess what? It made another push down. Oh, you must be thinking it's going to go down further. Okay. Those people who went short here had their stop loss where? Right above the swing point. Pretty much where this range is. And what are these people thinking? The moment it went up again, oh, it's a good opportunity for us to get short. And the market just went the opposite. Okay, these are where people place the stop losses. If you're going short, your stop loss is essentially a buy stop. Okay, these are buy stop orders that are just waiting to be triggered. Okay, so identify where most people are putting their stops. Move on to the second part of the chart on the right here. and tell me, what do you guys see? Where do you think most people have placed their stops at? I'm gonna give you guys some time. Okay, right over here. What do you guys think the market's gonna do? It's gonna ram all these stops up because it's so liquid. It's liquidity that they're after. There you go, guys. So the next time you're not sure where the market is headed to, think of where the stop losses are because that is the most liquid place. There are orders sitting down there waiting to be triggered. Okay, this is a big giveaway for you guys. Okay, if you're struggling with knowing where the direction is headed to, think of where there are the most stop losses sitting at. Break to the upside. The big boys are so good with playing with your emotions, guys. Because as human beings, we are not naturally born to trade. Trading is somewhat going against our natural human instincts. Let's just observe this chart. There's one last example. See the structure of price, downtrend, push up, failed to make a new low. Okay, uptrend started, right? High, retraces, new high, made a significant new low. It's still an uptrend, but it's ready to enter into range mode. Again, by now you already know that the range period is when new participants will enter the market, and where they place the stop loss is so predictable, guys. So from the two previous examples I've shown you, you already know that there are stop losses sitting over here. And guess what? Liquid. I'm gonna get you. Okay, essentially that is where price is always headed to. Okay, made a new downtrend. Okay, this might be a turn, right? This high exceeds this high, a higher low. This kind of confirms the uptrend. And guess what? It's another trap. Okay, what did the big boys use to trick you this time? This long body candle here. Okay, this bullish move to the upside, it's a retracement. It's just a pullback for more sellers to jump back into. If you're like most people, seeing this up move, seeing this big body candle, you would easily think that the market is going to the upside. Okay, try this exercise. Go into a chat room and try to use those human indicators. That's what I would call them. They are the most reliable indicator out there. Okay, see what everybody's talking about. If everybody's eager to get long and they are so sure it's gonna get long, you know what to do. Do the opposite. Okay, those are my favorite indicators. This should be a fun exercise for you guys. Okay, there are tons of chat rooms that are free out there. That would end this video. Thank you for watching, guys. Hope it brought more value into your trading. Best of luck. Stay disciplined. Follow your rules. Make lots of money in the market. Talk to you guys later. Bye bye.